Thank you, first of all, for taking the time. I know you have had a very busy schedule already here in Washington, so we really appreciate you taking the time. And also, congratulations on your nomination as Executive Vice President of the European Commission for an economy that works for people. And that's really my first question. Could you tell us about your expanded role and more importantly, your priorities in this new capacity?
Good afternoon, and thank you very much for this invitation. Well, indeed, we are now in a process of transition to the new European Commission, where I would be in charge as an Executive Vice President for the economy that works for the people. And often we get this question. So what we are putting here as an emphasis is that when we are discussing economic growth in Europe, we should be concentrating not only on economic growth, but also that the benefits of this economic growth are felt by all Europeans. So it's an emphasis on inclusive growth, on reduction of income inequality, and basically on seeing economic, social and sustainable, not as three different policy strands, but seeing them as one. As you know, we are now undergoing major transformations of our economies. Economies are getting more digital. We also need to address climate change. We need to move towards carbon neutral economy. So this is an aim which EU has set to become carbon neutral by middle of the century. And of course, when we are managing those transitions, it's important to ensure that this is a just transition, that there are no sectors or no regions which are left behind, that we help those sectors, those regions, those people actually to manage this transformation of the economy. And of course, in all these areas, I'll be also in charge with cooperation with our international partners. So therefore, I am very much thankful for this possibility to address today the, well, primarily US stakeholders.
When you were mentioning making sure that the benefits of economic growth translate into benefits for the day-to-day life of European citizens, obviously the financial sector plays a very important role in that. And within that, the banking sector, the lending activity, credit, financing, it's quite essential in this endeavor. European Banking Union has been quite a success so far, given your previous efforts. We have made tremendous progress with the single supervisory mechanism, with the single resolution board. There are a few elements that are missing. So first, tell me your view of the European banking sector today and its challenges. And then perhaps you can go into talking about how to complete the European Banking Union and how important that is.
Yeah, if you look at the European banking sector, definitely one can say that it's in much better shape than it was maybe a decade ago. It has much better levels of capitalization, stronger liquidity buffers. It's now building up, what we call MREL, minimum requirements for own resources and eligible liability. So basically building up bail-inable buffers so that we can practically implement the main principle of the banking union, that in case of bank failures, it's not bailouts by taxpayers, which are first in line, but it's bail-ins by bank shareholders and creditors. So, as you already mentioned, we have our single supervision and single resolution up and running. So the third main element for the banking union is European Deposit Insurance Scheme. We have put forward a legislative proposal on this as European Commission already in 2015, but it must be admitted that discussions has been slow on this among European co-legislators, so we'll now be looking at the ways to instill some new dynamism in this debate, and also how this third pillar of the banking union established.
So how do you evaluate the progress in the discussions on this file? Do you see a path forward?
I see a path forward because there is also, then we need to get a bit in how decision-making works in the EU, that European Commission is one which comes forward with legislative proposals, and then there are two co-legislators. One is EU Council representing EU member states, and another is European Parliament, and eventually both branches need to agree. The good thing is that this discussion is not blocked in neither of the legislative branches, so there has been a high-level working group in Council among EU member states, so we're looking forward also for their conclusions, which are due by December. And from the Commission side, we will be coming, with new elements, how we can help facilitate this discussion. Probably we'll have to move in a more gradual way, starting with liquidity support to national deposit guarantee schemes, but not really losing from sight the end goal, which would be to still have a fully European system, or to make sure that basically deposits of Europeans are guaranteed regardless where exactly they are located, in which member state.
Right, and undoubtedly there has been tremendous progress in risk reduction, which will allow progress in this file. Well,
as regards risk reduction, indeed, this is a discussion how much risk reduction we have in our banking system, how much risk sharing we therefore can afford. On risk reduction, already was mentioning capitalization and liquidity buffers. In December last year, we reached political agreement on so-called banking package, which implements Basel standards as agreed when we started that legislative process. So it means introduction of leverage ratio, net stable funding ratio, work on fundamental review of trading book, initially as a reporting requirement to help to prepare for this also becoming a capital requirement. Also, if you look, for example, at non-performing loans, they are now more than 2 times below of post-crisis peak. So it's not only that we are getting our regulatory framework in line with international standards, and we already have started the consultations on the, so to say, finalization of Basel III, of the final agreement of the Basel III, but also we work practically with member states on reduction of NPLs. Well, one is, of course, obviously economy is growing, it's helping, but we are also helping member states to come with some targeted solutions like asset management companies, things like this. We have been implementing them in Italy. Just recently, Greece came with a new initiative. So we're also trying to help in this way.
And you mentioned the second sort of round of reforms on the Basel side. So obviously Basel III, completing Basel III has been a subject of quite substantial debate. The EBA has come with an estimation of impact. It's around 135 billion gap that would be seen once Europe implements the new rounds of reforms. How do you see implementation of the last round of Basel III reforms, and how to avoid an excessive or excessively high impact on the European banking sector?
Indeed, this has been analysis of the Basel Committee itself, confirmed by European institutions that currently, indeed, it seems that finalization of Basel III would affect European banks more than it would affect, for example, US or Chinese banks. So we need to look at this level playing field issue. In any case, what we have been announcing so far, we are willing to forcefully implement finalization of the Basel III. Of course, it's important that all major jurisdictions implement all the main elements of completion of the Basel III.
Including the one we are right now.
Of course, of course. And we also have announced that we will be making full use of transition period until 2027 for output floor. And we currently have started public consultation on the way forward on implementation of Basel III, also how some European specificities can be taken into account, not to arrive at some disproportionate results.
And if we move away from the banking sector and we move to capital markets, I think there's been growing consensus that excessive dependency on bank financing is something that needs to be resolved. And that is why a very ambitious project for a capital markets union was devised a few years ago. It seems that there is need for new impetus in completing this project. Under the new presidency, what are the plans in completing the capital markets union?
Well, first of all, indeed, if we look at the European economy, we see that European companies are to much larger extent dependent on bank lending and are accessing capital markets to much lesser extent than it's in the US. And this, as we saw during the crisis, may create also some negative procyclical effects, because banks tend to be easier at lending during good economic times and then restricting credit during the bad economic times when it's exactly most needed. So making this procyclical developments worse. So from that point of view, system where a more balanced system with strong banking sector and also a strong capital markets is definitely something which is desirable and which we are working for. If we look since the launch of the Capital Markets Union, actually we had made quite a good progress, because we put forward as European Commission 13 legislative proposals, out of which 11 are already adopted or agreed. And we are currently moving, also making progress on one of the outstanding ones, which was on crowdfunding platforms. But we want to continue to develop this project of Capital Markets Union. It features very prominently also in next European Commission priorities. We will be putting emphasis on access to financing for small and medium enterprises. We have announced a concrete initiative of setting up a public-private fund to support initial public offerings of small and medium enterprises. We would also need to look in more complicated areas like harmonization, or at least partial harmonization of our insolvency frameworks, of our taxation structures, if we want to make further progress on Capital Markets Union. In any case,
which are perhaps the most challenging items in that agenda?
Well, indeed, those are very challenging items, as I mentioned, but I would say the steps which are made so far, we have made good progress. Focus on SME financing is something we can achieve. Then if we are willing to look at indeed more cross-border capital markets across the whole of the European Union, of course, we would need to look also in those more challenging issues.
Right. Let's move on to sustainable finance, which has been a topic that already in 2 days of meetings here at the IIF has been widely mentioned. It was a subject of intense discussion at our board of directors this morning. The new commission has outlined very ambitious plans on sustainable finance. Could you tell us about those plans and what you aim to achieve in the next few years?
Indeed. First of all, climate change is a reality and we need to act on this. And if we just look at 17 out of 18 hottest years in recorded history has been taking place since the year 2000.
Right.
So it clearly shows that climate is changing and we need to react. So that's why we have this ambition of Europe, A, of course, to implement Paris Agreement, and B, to move towards climate neutral economy by middle of the century. Of course, to do so will require massive investment, trillions of euros, and clearly it will be more than just public sector could pay. So therefore also financial markets would have to play their role in this transition towards climate neutral economy. And we came already forward with Sustainable Finance Action Plan, and as EU we are proud that we are a first major jurisdiction which has put sustainable finance into hard law. So we have already adopted several pieces of legislation on disclosures and on low carbon benchmarks. We are finalizing the work on EU taxonomy or classification system of green and sustainable financial activities. And we'll be building on this. So it will be high also on the next Commission's agenda. So building on this, we'll be coming with proposals on EU green bond standards, on eco-labels. We'll be looking on new areas on disclosures, going beyond banking sector. So there's going to be a busy agenda ahead of us. But we also want to use the experience we had from Invest EU program or European Strategic Investment Plan, how to unlock private investment with limited public support. So one of the initiatives is now to work on a European sustainable investment plan, which aims to trigger 1 trillion euros of investment during the next decade. And we'll also be working on European Investment Bank becoming our climate bank with a target of having half of its financing dedicated to climate by 2025.
You mentioned taxonomy as one of the big projects as part of this action plan. The technical report has been produced, there's been a consultation, the IIF has been part of that discussion. How do you see the process of completing that taxonomy? And without wanting to be controversial, is this an area where Europe should be leading, or whether a more international approach should be undertaken to develop a global taxonomy?
Yeah, well, first of all, when we are now discussing taxonomy, what we are setting up with our legislative proposal is governance system of the taxonomy. And in parallel, as you mentioned, indeed, we had a technical working group, which is already working, so to say, to prepare the actual taxonomies. So once we have a governance system going, and I'm hopeful that we can conclude those negotiations with co-legislators still this year, we already can use the input of technical experts group. But indeed, you rightly mentioned that climate change is a global issue, so it requires more international effort. EU is responsible only for some 10% of global emissions. So clearly, we need to work with our international partners to seriously address the problem of climate change. And that's why we are setting up international platform for sustainable finance with the aim exactly to bring together different countries from the world to have a coordinated approach on this green and sustainable finance, to look at the taxonomy systems, to exchange best practices, to the extent possible have comparable approaches, so that we avoid some kind of a fragmentation of this green and sustainable financial markets.
And it will be very important to have the US also as part of those discussions?
Well, so far, actually, we'll be formally launching this international platform of sustainable finance tomorrow here in Washington.
Right.
But it must be said, unfortunately, US is not among the founding members of international platforms, but we hope that at some time US also will join.
Right. If we switch gears to the area of the digital transformation of the industry, which has clearly been quite significant, FinTech developments, the European Commission put out a FinTech action plan. Tell us about how that plan is being implemented, and under the new presidency, which new initiatives are you undertaking?
Well, indeed, as regards our FinTech action plan, we're also making progress. So basically, one of the issues in this context we identified that we have many startups in Europe, but all too often they are going elsewhere, to US, to Asia, to scale up for initial public offerings, and so in a sense we are losing our potential champions. And one reason what we see is for scaling up you lack, so to say, the opportunities due to the market fragmentation. We have a single market, but it doesn't fully still function as a digital single market. So therefore, we really need to use the full potential of our single market for European startups to be able to scale up in Europe. So this is, the underlying narrative. So to the extent possible, we want our also FinTech companies to be able to operate across the EU based on a single license. Of course, we need to look also in different areas, address, for example, cybersecurity risks, to have a system of coordination, exchange of information. We need to look at crypto assets, including stable coins. Nowadays, there are lots of discussions, for example, about Libra. So we're also currently looking in this, and we intend to come with also legislation as regards stable coins. One area which will be very prominent in FinTech Action Plan is instant payments. We have, many different national instant payment initiatives right now taking place. We have, to large extent, necessary underlying infrastructure, both provided by European Central Bank and also privately by financial sector. So what we want now to set up is a pan-European instant payments system, because this is increasingly what our citizens and businesses demand, and we need to respond to this demand. So one can say that indeed also FinTech will remain high on our agenda in the next Commission.
You mentioned crowdfunding. Tell us about that project and what needs to be done to complete it.
Yeah, on crowdfunding, this was one of our proposals. It's, concerns both Capital Markets Union and FinTech. It's both. So that's exactly a good illustration of the approach, what I mentioned, that we want our companies to work based on single authorization. So the idea is to allow our crowdfunding platforms to work across the EU based on single European license. Of course, for this we need to set up some standards in terms of investor protection, in terms of transparency requirements. But once this is there, we want those crowdfunding companies to be able to explore the whole scale of the single market, as we are often saying in this regard, that after all you need a crowd to crowdfund. And there we are now also in advanced stages of discussions, and I also think it's realistic that we conclude our negotiations and reach political agreement by the end of the year.
And you made a reference to Libra, which obviously is in the headlines almost every day. The G7 is due to produce a report, probably in a few hours, will be announced. And you mentioned some intention about regulation or regulatory approaches. Is that something that where Europe is going to coordinate with its international counterparts?
Well, absolutely. This is one area where we need also internationally coordinated approach. We are currently looking, of course, assessing exactly this Libra project in Europe. Of course, we needed more clarity on exact concept, exact nature of this Libra initiative. Therefore, we sent a questionnaire to this Libra Foundation, and just yesterday we received responses. So we are currently in assessing them. But we have done also preliminary analysis. We did what we called regulatory mapping from crypto currencies, or we prefer to use the term crypto assets, because, well, we tend to say that there's only one currency in Eurozone, it's Euro. This was maybe more with this, volatility of Bitcoin in mind, this rapid increase in prices and then strong decrease in price. Now we are looking more specifically in a stable coins framework. Well, Libra is a specific example we're looking at, but also more broadly. So, and indeed, it may be the case that we would need a new EU legislation, adjusting also of some existing pieces of legislation to have a regulated framework for stable coins.
I know you have a hard stop at 5:30, but I couldn't help read some of the questions that are coming from the audience. And I'll pick just one, which is the B word, Brexit. There's been an agreement. The Council has just a few hours ago ratified that agreement. Tell us your outlook for the Brexit negotiations and what do you expect going forward, especially for the implications for the financial sector?
Yeah, well, indeed. So there was agreement reached between EU and UK government, basically on some additional clarifications concerning the Irish border, concerning the relations between EU and specifically situation in Northern Ireland, basically with the aim to avoid hard border between Republic of Ireland and Northern Ireland. So solution has been found. How exactly it will be addressed now, it's to be ratified by both UK Parliament and European Parliament. So, well, information we have now that apparently British Parliament intends to discuss and possibly vote this issue on Saturday. So we hope for this ratification of agreement, and the same for European Parliament. So those are next critical steps. Then what implications it has for financial sector? Well, those negotiations we had just now did not touch upon that part of withdrawal agreement, which has been agreed already quite some time ago with Theresa May government. So as regards implications for financial sector, so we would be working based on a system of equivalences, while preserving regulatory autonomy on both sides. And provided this agreement is ratified, we would start working with our UK counterparts pretty much immediately towards equivalence assessments from both sides, aiming to finish this assessment by the June 2020. Well,
it seems there are many issues still to be addressed as part of the Brexit file. So we look forward to welcoming you in our next IIF conference to discuss those implications. I know you have commitments to go to here in town. I want to thank you again for taking the time to stop here and share these views with the audience, and congratulate you again on your nomination. Thank you so much.
Thank you.
Thank you, everyone.
Thank you.